Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. We appreciate listening this morning. We have a good show on hand here, Kim. We got Lance Larsen, our CPA at Haven Financial Group with us. If anything, the listeners, if they hear anything today that resonates, questions, worries, concerns about taxes, or really anything, whether it's today, this week, whenever, give us a call at 612-504-8400 or visit us online, havenfinancialgroup.com. Lots of continuing classes at the Education Center and in the public. Again, we continue to have educational classes, very well attended. Some have waiting lists, and we encourage both Haven clients, listeners, anybody, if you want to come out and learn, that's a great way to do it. So, Kim, good to be with you, and it's good to have Lance with us today as well.
Thank you very much, and it's good to be with both of you. I'm looking forward to this conversation today. When Lance is here, you can pretty well bet that we're going to have a conversation about taxes. So, Lance, we're really glad that you could be here. We're going to talk about how much control you can actually have over your taxes. I love this concept. You know, they say, the old saying goes, death and taxes, the two things you cannot escape. And while death is one none of us is going to escape, taxes we could be a little more manageable, I think, than maybe some of us know. So today we're going to talk specifically about income tax and estate tax and the history behind them. We're going to talk about tax treatment of traditional versus Roth retirement accounts, taxation of Social Security. Is it a myth? What is the facts? And then finally, we're going to talk about the one big, beautiful bill and the estate tax exemption. So let's get started, gentlemen, if we could, and talk a little bit about, you know, what's behind the whole idea of income tax and estate tax. Where did that all start?
Well, Kim, it kind of started with the 16th Amendment, and that was passed in 1913. And the 16th Amendment, I can pull it up right here, says Congress shall have the power to lay and collect taxes on incomes from whatever source derived without apportionment among the several states and without regard to any census or enumeration. So that is where our income tax started. It was back in 1913 when they passed that. Before then, the way that the country received most of their revenue was from tariffs.
Absolutely. All right. What about estate tax? Was that all rolled into the 16th Amendment?
No, that one came a little bit later. The date on that one is actually probably about 1916. And then they're saying that that one was passed to kind of help fund the U.S. war efforts during World War I. Now, what's kind of interesting is that when we start looking at the income tax and we look at these income tax rates, right now we are looking at the highest marginal tax rate at 37%. And everyone thinks, oh my gosh, the feds are taking a little over a third of my income. Well, that's better today than what it used to be. Back in 1940s, 45 area, when we're trying to go through World War II, we had tax rates as high as 94% marginal tax rates.
Wow.
And in fact, Glenn and I, we actually just had a class here that we kind of went over the history of the marginal tax rates. And we saw that they were low and then they went high. And then after World War II, they kept the marginal tax rates up in the high 90s. They were slowly coming down. But it wasn't until about 1980s when Reagan was president that we actually started knocking those highest marginal tax brackets down into the 30% range there.
So that's hard to believe, actually. I think a lot of people would say, what? I don't remember that being the case. But it was actually President Reagan in the 80s that started sort of Reaganomics and the changes that he not only put forth in the economy, but also with taxes. So where do we stand now? Walk through some of the tax brackets, if you will.
So today, we have, thanks to the Tax Cuts and Jobs Act, that's what started our new tax brackets, tax rates there. We are at 10, 12, 22, 24, 32, 35, and then 37. And then with the big, beautiful bill, they have made those tax rates, and I like to say, quote, permanent, because as we know, permanent for Congress means until they decide to change it on us.
Exactly. That's so true. Um, and for the majority of people, where does a big chunk of the U.S. Population fall between what and what there?
They're going to be in the 12, sometimes getting to the 22%. So there is another statistic that I was just looking at last week that was saying, where does the income fall? Well, the top 1%, you'd have to be making over $600,000. To be in the top 50%, well, now you're only making like 100 grand. So when you look at the entire US population, over half the people are making less than $100,000. And so for that should put them into either a 12 or 22% tax bracket based upon if they're single or they're filing as a married jointly return.
Lance, who's not paying taxes in the country?
That's a great question.
I would say, Lance, if you could, at what income do you not have to pay any taxes?
Right.
So the standard deduction is given to all taxpayers. So for single people, anyone who's making $15,000, $16,000 or less, they're not going to be subject to any federal income tax. The standard deduction will wipe that all out. For a married couple, we're looking at around $31,000 to $32,000. And then, of course, seniors will get an extra bonus on that one. So last year, 2024, the seniors married couple was $34,700. This year is going to be $35,500.
Okay.
So there's going to be people who make a small amount of money that aren't going to be paying any taxes.
And Lance, I'm just curious, even for myself, I'm just curious, what listeners or people do not even have to file a tax return? They don't even have to bother with it.
So those who their income is going to fall underneath that standard deduction, they are not required to file. The requirements to file, according to the IRS rules, says if your income is going to be larger than the standard deduction, then you are required. So when we look to people in retirement, there's been a handful of people that have come into our office and they say, "Oh, Lance, the only income we have this year is going to be Social Security." Okay, well, that's great. So because Social Security is not going to be taxable without any other income sources, they're probably not going to have to file anything. Well, this is where we also start having the discussion. Well, because all you have is Social Security, you don't have anything else. Maybe we can start doing pulling in some of that income to have it become tax-free. So that's where we want to have these discussions, that even if you're not going to be required to file, there still may be opportunity to help not pay taxes on things that you should be paying taxes on.
Okay. Kim, if I may add, the takeaway from this first segment is taxes have been around for a long, long time, and they tend to fluctuate based upon who's ever in office, the power of the president, of course. And history shows that there's changes. They've always been around, but can you imagine paying 94% or whatever of your income? A third doesn't sound too bad, and it is pretty painful. But what I'll say at Haven Financial Group, we're very big into forward-thinking tax planning. If you're a younger listener, you have your taxes prepared, yes. But as we get older, those accumulation years are behind us, and now you have to create your own paycheck. How do we do that in the most tax-efficient way possible? That's where tax planning, we're in that season now. January to April 15th, tax preparation. There should be no extra cost to do the planning process. And with our clients, we're really doing a lot of planning. Again, to minimize taxes to the best of our ability. Where do you draw from in the most tax-efficient way possible? Do you have a partner that can help you through this? Because big investment firms, if you ask your advisor, and if they're with a big investment firm about taxes, they're going to say, well, go see your tax guy. Well, Lance is our tax guy in-house. He's part of these conversations. If big firms, you're going to ask him about estate planning. Well, go talk to an attorney. We have that in-house. So Absolutely. All these retirement puzzle pieces, taxes included, should be part of the whole retirement conversation. And for most people, it is not. And I'll tell you, not a very uplifting comment would be taxes will affect us at every stage of life, and even probably more so in retirement. Again, that's not uplifting, but it's a truth.
We have to speak the truth here, Larry. 612-504-8400 is how you reach the folks at Haven Financial Group. If you've got any kind of retirement questions, or if you've got any questions about taxes and some of the conversation that we're having here today, please don't hesitate to give them a call. Lance Larsen is with us. He's a CPA there at Haven Financial Group. And when we come back, we're going to talk about tax treatment of traditional versus Roth retirement accounts. If you've got retirement accounts, you got some questions about taxes and how they relate to them, this is a segment you won't want to miss. You're listening to the Haven Financial Group Radio Show.